All right, let's look at yields now. So starting off with the US 1 year, I like to look at that first. I mean, that's just been a slow grind sideways within this channel, but we're starting to perk up a little bit. So I'm still waiting for that close above 5.5, ultimately getting pretty close. But normally it's just a sideways day. Even when it's up like this pre-market, I don't look at it too much. I'm just looking for that close above 5.5, really. I mean, the best close we had really was on the 25th of August, and then it did peak up and then it came back down again. So let's see, the 2 year slowly grinding up. For me, across the board, the only thing that will send yields lower, I mean, except for some data, point that will, some news that comes out that says, oh, it's bad news, therefore they're going to they're going to lower rates sooner than we expect. So bad news may just have a little, immediate impact. Otherwise, the only other thing I can think of that will have a sustained move lower in yields, because a lot of people are thinking that we've peaked. I don't think so. I've said for a long time that we're going to go higher. And here we're looking for a quadruple breakout, 1, 2, 3, and then if we do break out, it'll be 4. The only thing that will reverse that for me is a market crash, just as happened here. And for that to happen, I think it'll be led by banks, as I just said in my last video, or it'll be led by maybe the Magnificent Seven just getting crushed. Maybe they all peaked, Nvidia starts to flush, it then takes down Apple, then technical levels are breached and they all collapse on each other, and there's just this momentum, shorts come in, people get stopped out, and a big flush happens. Now, that kind of a market crash should send people into bonds and therefore send yields down. But I actually think the banks will lead the markets down. I think we're going to get more bank failures just because of higher interest rates. So it's a vicious circle. So I think we're going to go up. And if the market crashes, because we're going up, then the market crashes, people buy bonds, and then the yields go down. But ultimately, we're going higher. 2 year to me suggests we're going to go higher. Today, nothing special, but otherwise, higher highs, higher lows. The trend is intact. 5 year, same thing. Actually, respective to the others, I think the 5, and look at the 10 year, even better. The 30 year, same sort of thing. They're actually, the longer end of the yield curve is actually looking like it wants to break out first. So maybe the 2 year, it'll probably happen all on the same day, but I wouldn't be surprised if the 5 year does it first, 5 or 10 year, maybe even the 30 year, probably all on the same day. But otherwise, they're all going up. The EU yields, same thing. Higher highs, higher lows, generally speaking. Trend is intact. The British just slightly behind, but nothing is different. Look at the Japanese today, bam, new highs. So yields going up, that usually sends the market down. So that's my thesis, yields higher, market lower. But again, if all of a sudden there's a cascade drop in the markets, then maybe yields just level off a little bit because people will start buying bonds out of fear. Now let's look at the dollar, because usually yields and the dollar go up together. Today, not the case so far. The DXY kind of stopped around 105. Now, for me on Friday, that was a very, very nice hammer. For me, that suggested we're going to go higher. Now, I happen to be doing the video on Monday, and I can see there's already a bit of a drop. I think that's BOJ related. That's Bank of Japan stuff. Because normally you'd expect this to go up to basically test the last level of resistance. I've got this 105 point sort of 7-ish to 106 zone, this little tram line here. That's the last level of resistance before we start to really break out and go towards the 110, 113, 114 zone. So, I mean, the move down from 19, the move up from 99 was really, really impressive. And to me, once we cleared 104.5, that's it. We go to 106 to test 106, but we sort of leveled off at 105 so far. Again, this hammer for me was very, very bullish, but I think it's the BOJ related news. So I did say, let's look at the dollar Japanese yen, that around as we neared 150, there would probably be intervention to save the Japanese yen, which should send the dollar down. So I haven't read the news yet, but maybe that's what happened because we've got a bit of a drop. But look at the retracement so far. It's recouped a lot of the losses. So the DXY may actually, just typical technical 101, may just have this prior resistance acting as support, and that's what it's done so far. So maybe we're just bouncing off 104.5. We're going to curl and then keep going to 106. So maybe the DXY will actually, maybe not today, but in 2 or 3 days, start to break out again and start to test 106. So the DXY, I'm not yet bearish. You can see it hasn't lost the ascending. So it is certainly not bearish. It just had a bit of a drop because of, I think, what happened in Japan. Let's look at the currencies very quickly. Euro, dollar bouncing a little bit. Obviously, the DXY is down, so everyone's going to have their little bounce. The euro is bouncing against the dollar. For me, it's not going to bounce too much before meeting resistance. And again, DXY has already hit its support and is starting to recoup its losses. USD Japanese yen, you can see it just started to stall here. That's probably the news. But that's not bearish either. Pound US dollar, it just lost its support. So a bounce will probably meet resistance very quickly. So the DXY is red today, but it's not bearish. I think that's my point. All right, now I'll take a look at commodities in my other video.